Hi guys, welcome to A Simpler Approach. If you are new to the channel, please consider subscribing, liking, commenting, and sharing this video. Now today, we will be looking at cooperative societies. Let's get started. Our objectives for this lesson includes number one, we must get an understanding of the concept of cooperative societies. Number two, we must know the types of cooperative societies. Number three, we must be able to list the advantages and the disadvantages of cooperative societies. And number four, we must learn how to prepare the financial statements necessary for cooperative societies. Okay? Now, by now, you should know how we do things here. Okay? We set the foundation and then we build on it. Okay? And in this lesson, we're going to do just that. All right? Awesome. So, first things first, definition to the concept of cooperative societies. Now, cooperative societies are formed by an association of persons who pool their resources together in order to meet a common economic goal or aspiration. All right? Now, there are cooperative societies who operate on the basis of making a profit, but the underlying concept of cooperative societies is not necessarily to make profits, although there are cooperative societies who do make profit. All right? So that's the background upon which cooperative societies come about. An association of persons, same goal, same dream, same aspiration, and in order to accomplish that, they pool their resources together in order to do so. All right? Now, there are two types of cooperative societies. The first is what we call producer cooperatives. This type of cooperative includes persons like farmers or fishermen. And what they do, they pool their resources together and sell them at one price instead of competing with each other. You sell it for 100, you sell it for 120, you sell it for 150. Instead of doing all that, they just bring everything together, sell it at one price so that everything runs a little smoother. All right? Now, the primary aim of this type of cooperative is to ensure that a fair price is received for their products. Okay? And as a result of that, this type of cooperative may be deemed as a profit-making cooperative. Okay? Now, this is number one. The second is called consumer cooperatives. Now, with this type, the sole purpose is for consumers or like-minded individuals to come together in an attempt to combat high prices. How do they do that? They come together and buy the items that they want in bulk. And you know, when you buy in bulk, you benefit from all sorts of discounts. Okay? And when the items are received, they sell it to each other below regular retail price. In doing that, they escape the high price of the same product that might be offered by someone else. Okay? Now, if there is any surplus, what they do is they share it among themselves in a fashion called patronage refund. So the way in which you purchase goods through the cooperative is the way in which you receive patronage refund. So naturally, the more you purchase would be the more you receive in patronage refund. If you purchase less, then at the end of the day, you would get less patronage refund. Okay? It's only fair. It's only logical. The advantages of cooperative societies includes, number one, it doesn't matter what the size is or what's the amount of investment you hold. As long as you're a member, you are entitled to a vote. That's number one. Number two, proxies aren't allowed. And proxies, a proxy is a person who votes on behalf of somebody else. That's not allowed. Only you can put forward your own vote. Okay? And number three, the financial statements for cooperatives are available for members, but not the general public. Members only. Members only. Okay? Disadvantages. Now, some cooperatives may pay a modest dividend to some of their members, while other cooperatives don't pay any. All right? This is due to their nature of being either profit-making or non-profit-making. Okay? And the members would know of that from the get-go. And the number two, each member must support the organization in order for it to succeed. If that doesn't happen, you will find that the cooperative will fall in difficult times. Okay? And this is a disadvantage because we are all coming together to accomplish a common good. But if we are all not coming together the way we are supposed to, then the common goal that we seek to accomplish may not be accomplished. It's either that, or you find some persons are pushing more than others. So you'd find an uneven scale. All right? Now, when recording capital for cooperative societies, the good news is the process is pretty similar, pretty much almost the same as limited liability companies. All right? Before we get to that, we must also know that capital can be raised for cooperatives in various ways. It can be raised through the purchasing of goods and services by the members, grants, or donations given by other individuals. Okay? But outside of those three, a cooperative society can also sell shares. If it is that they sell shares to acquire capital, then recording it in the general journal would be a situation where you debit receipts and payments account and credit share capital. Okay? If it is that you are asking yourself, why is it that we debit receipts and payments account and not cash book? I will tell you first, that's a very good thought, very good indirect question. And the response to that would be, for cooperative societies, the place where they do all of the stuff that the cash book does is called the receipts and payments account. In other words, for regular entities, it is called the cash book. For cooperatives, it is called the receipts and payments account. Cool? It's pretty much the same thing. It serves the same function. We're recording everything that comes in and everything that go out in terms of cash and checks. But in terms of name or title, regular businesses, cash book, cooperatives, receipts and payments account. Okay? Now, the financial statements for cooperative societies, there are two primary ones. Okay? The income and expenditure account and the appropriation account. These two come in one full thing. All right? You'll see it in a little while. Now, as you know, the income and the income statement. The income and expenditure account is different because the income and expenditure account only outlines all forms of income and all forms of expenditure. And the appropriation account takes care of the stuff just like the limited liability companies. Stuff like transfer to reserves, payment of shares, and stuff like that. Okay? The other item the other financial statement that is necessary is the statement of financial position. Now, luckily, the statement of financial position, as you know it, especially where limited liability companies are concerned, that remains the same. The only difference is that the finance by section outlines all the items that finance the cooperative society. You may not see them in terms of the exact name as limited liability companies, but they will serve the same purpose as the items that finance the cooperative society. All right? Nothing will sum up all of this the way that a good example would. As such, we will take a look at an example. This example will allow us to see what the income and expenditure account and the appropriation account looks like, and in a specific way, what the statement of financial position looks like. So, let's dive in, shall we? Before we get to the example, in just a second, I think it is necessary to show you this. This is the full outline for the income and expenditure and appropriation account. Now, this is pretty simple because what it does, it outlines all forms of income, all forms of expenditure, and then it takes care of the appropriations. All right? So at the top, you'll see income. Example, membership dues, interest received, and any other form of income. Cool. Expenses, that's expenditure, telephone, stationery, traveling, bank charges and interest, interest on members' deposits, among a host of other expenditure that is tied to the cooperative society. Okay? And then in the appropriation section, similar to limited liability companies, we have transfer to reserves. We have something called honoraria, soon talk about that. Patronage refund, we mentioned that a few minutes ago, as it relates to when surplus is derived from consumer cooperatives. They give back the surplus to members through patronage refund. Then you have proposed dividends, and then you have bonus, and bonus depends on the level of income that is derived. Honoraria is a how should I put this now? It is what we call an incentive for work that is done. So for example, you have a president of the cooperative. You have a president of the society that has been doing tremendous work for 30 odd, 40 odd years. And he's retiring. Okay? In retiring, you would give him a gift. Okay, a parting gift. And that parting gift, let's say an extra 50 G's, would be something like an honoraria. That's what it's called. So it's a gift, it's a reward for services rendered. Okay? After you've taken care of your appropriations, what is left is undistributed surplus for the current year. Add to that undistributed surplus brought forward from the previous year, and it leaves you, after you add the two together, with undistributed surplus carried forward to the next year. Right? So this is the income and expenditure and appropriation account. And the statement of financial position remains the same. So now we can go to that example. Yes. So this is it. Jasper Cooperative Society. And we have a trial balance here that is perfectly balanced. And then we have some notes. Always pay attention to the notes. Valid information is there, necessary to how you should go about preparing your statement. All right? So we have information on membership dues, on electricity that was paid in advance, depreciation, undistributed surplus, transfer to whatever reserve, and an honorarium to a retiring president for services rendered. All right? Now, when you take all this into consideration, this is what the income and expenditure and appropriation account would look like. All right. Now, let us break down a few things here. Membership dues, 570,000 represents the amount that was deposited to the cooperative by its members. The 12,000 represents dues that are owed. Now, if you're wondering if we have to put accruals and prepayment in this too, the answer is yes. I'm terribly sorry, but the answer is yes. Accruals and prepayments, it exists in this. Okay, so that 12,000 that you're looking at membership dues, that's membership dues that was owed. All right, and that was note number 1, if my memory serves me well. Okay, electricity. Remember that electricity was prepaid. That's a prepayment. You know that you're supposed to subtract prepayments. Okay, so 8,500, which is the amount paid, minus 5,000, which is the amount that was prepaid, leaves 3,500, which is the amount that was used for this academic year. All right. Depreciation. Let me just backtrack for a second. Note number 3. Depreciation is to be charged at 10% on cost for equipment. You simply look in your trial balance, find equipment. Equipment, 500,000. So, depreciation for equipment, 10% on cost. That's the easy one. The other one is the not so easy one, depending on if you remember or you don't remember. 15% on the reducing balance for the motor van. Now remember that with reducing balance, you must calculate what the asset values now first. What do I mean? It means that naturally there should be provision for depreciation in the trial balance. And rightly so, yes it is. There it is right there. Provision for depreciation, 48,000. That represents all the depreciation that has been charged on motor van from it was bought to now. Okay? Now, if we wish to calculate what it values now, we must subtract depreciation, provision for depreciation, 48,000, from the cost price of the motor van, which is 350,000. Having subtracted the 48 from the 350, you can then calculate what your depreciation charge would be. All right? Remember that. So, back to the question. Having done all of that, you would have added together your expenditure, which amounts to 210,300. Subtract your expenditure from your income, and that leaves surplus for the year of 406,700. Then we take care of our appropriations, and we only have 3 in this case. Transfer to reserve, which is 20% of whatever surplus was. That's 81,340. The honoraria to the retiring president, and then dividends paid as per the notes, instructions given in the notes. All right. All of that together gives us 149,340. We take our appropriations from the surplus, which leaves 257,360. Add our undistributed surplus from the previous year, which is 558,000, which leaves surplus of 815,360 that will be carried forward or brought forward to the next year. A little simple, isn't it? Yeah, I was thinking the same thing. Oh, the statement of financial position. Almost forgot about that. The statement of financial position. But I must point out something, just in case you don't remember. Remember we're talking about depreciation just now, pertaining to how it should be calculated? Remember that in the balance sheet, accumulated depreciation must be accounted for. Now, if there is no provision for depreciation, then the current depreciation charge, meaning the charge that we just spoke about in the income and expenditure account just now, that's the charge that would go in the second column here for equipment and motor van respectively. However, if there is provision for depreciation, the provision amount and the current depreciation charge must be taken into account. Okay? Remember that. So, for equipment, it was 20% of the cost price. Let's backtrack a little bit so you can see. Note 3, 10%. My bad. 10% at cost for equipment. So 10% of 500,000 is 50,000. Okay? That's for equipment. Now, if there was provision for depreciation, which there is, you would have to add the 50,000, which is the current charge, with the 65,000, which is the provision. Remember that provision for depreciation represents depreciation that has been charged on the asset to date, from it was bought to date. And also remember that the statement of financial position must always have current balances. That's what net book value means. Net book value. What does the asset value now? So for equipment, it would be 50,000, which is the current depreciation charge, and 65,000. All right, that's 115. For motor van, the current depreciation charge is 45,300. That's the current depreciation charge. And then when you add it to the provision for depreciation, it would give you 93,300. Now, always remember that once you're doing the statement of financial position, there is depreciation in the mix and there is provision for depreciation in the mix. Remember how you treat that in the fixed asset section. Okay? Now, for current assets, we have accounts receivables, membership dues. In this case, remember that debtors is not primarily in the equation. So accounts receivables comes from members who are supposed to pay dues or shares or whatever it is that they're supposed to pay. Now, when that is owed to the cooperative, it is seen as accounts receivable. Okay? Cool. Prepayments and bank in this case. For our current liabilities, we have accounts payable, accruals, and honoraria. All right? You know the regular gist and structure of this. So you know what to add, what to subtract, and the whole 9 yards. Now, for capital and reserves, as we spoke of before when we were laying the foundation, the concept between the statement of financial position for cooperatives and limited liability companies, the structure is pretty much the same. The difference lies in the capital and reserves section. There will be a slight difference as it relates to how cooperatives are financed versus how limited liability companies are financed. In this case, all we have is share capital, statutory reserve, and the undistributed surplus. Okay? So that's the underlying concept and understanding of cooperative societies. I hope my effort to make it simple and straightforward was quite effective. See you again on the next topic. If you enjoyed that video, please comment, like, share, and subscribe. And as always, if you have any questions, queries, or concerns relating to just about anything, current topics, previous topics, topics to come, whatever it may be, let me know in the comments section below, and I will respond to you directly. Until next time, walk good, stay safe.